Yes, yes.
Yeah, thank you. So this is fund accounting, helpful for all the people from finance background. It is like, as I mentioned, it's a hot cake into the market, and they'll see what it takes to be a fund accountant and what all topics would be covered under the fund accounting. So today's topic is fund accounting, and we'll cover mostly on the basics of private equity funds, or rather, I would say, we would cover that. So my name is Mohammed Samiuddin Owais, and I work for Apex, and I'm working as an AVP there. It's been like close to 2 years I've been there. I worked for a couple of different companies into the same field of fund accounting mostly. I worked for mutual funds, some part of the hedge funds, and now I'm totally focusing on the private equity. So I do have like 11 plus 12 plus years, rather I would say 12 plus years of experience into the accounting. That's my passion, which I follow always, being into the core accounting side. And by qualification, and I have done MBA into finance as a major, and I have done also like CS, company secretary executive part, that is CS intermediate level. Moving on, we'll see what do we have to discuss today. uh, when we talk about the fund accounting, that would be a part of basically the alternative investments. Why these are named as alternative investments? So there was something called as traditional investment, and to that something new started now. So traditional investments, what I mean is it could be your stocks, yeah, normal stocks, right? Like equities, preferred shares, which you can trade into the market, and it's been like been there into the market for the ages, like it's like more than 100 years, I would say. Equity was existing, and the bonds we had, and the cash is something like a traditional investment you have. So these are the like kind of traditional investments which everybody knows mostly. Something came up into the market which is like termed as alternative to the traditional. That is why they have named this as a alternative investment, something alternative to the traditional investments. Traditional investments. So what could be the alternative has come into the market is your private equity fund, hedge funds, real estates, and your art, and some big pictures you buy it, right? For lakhs of rupees, people buy it. And some antiques, right? We see sometimes some kind of paintings or some antiques which would look very small, or not so worthy, but people who knows the value of that, they will understand how costly it is. So all such things would be termed as they are the part of the alternative investments. So traditional investments, your normal stocks, bonds, and cash, and other things which were existing before. Or alternative investment means these are the new terms, right? Private equity, hedge funds, people were not aware of this, all kind of these things. I hope we are clear on this. You can put it in the chat box if you are good with that, or any relevant related questions are there, you can just put it. I'm just looking at the chat box as well. Good, bad, yes, no, you can just mention there. Okay. Now let us understand what is fund accounting means. Fund accounting refers to the maintenance of financial records. Fund accounting is nothing but that it is a maintenance of accounts. You have to maintain. You have to book the journal entries. You have to book the ledgers. You have to book the prepare the profit and loss and balance sheet. All the basic stuff which is done into the accounting. That is called the fund accounting. But what is the difference between the normal accounting and fund accounting? So when we say fund accounting, it refers to the accounting of the investment fund. Okay, we'll understand more when we move forward what do you mean by like investment fund and all the other things. But for now, you just understand fund accounting refers to the maintaining of the financial records, or the maintaining the accounting, I would say, of any investment fund. That is a reason it is also considered or termed as investment accounting or the investment fund accounting. Okay, what all does it include? It includes your investment activity, investor activity, sorry. investor activity means what does it takes? Like you need to talk to the investor, help them filling the form. All those stuff would be coming under the investor activity. Portfolio activity is the fund manager would take the decisions where to invest, how to invest, when to invest. All those decisions, all booking of those entries would be come under portfolio activity. And you need to, as an accountant, as a fund accountant, you need to also take care of the how much your fund has earned the income from various sources. It can be like if you are investing into equities, you will get dividends. If you are investing into bonds and debentures, then you would get some kind of interest. If you are having some short-term securities, then you will also get the interest. So there could be different, some capitalized gains would be there if you're selling some securities. So all those sort of incomes, how much your fund is earning, you need to keep a track of that and book into the system. And next is very important is the expenses, like what all expenses your fund is incurring. You need to make sure that you are keeping a track of that and booking it every monthly or quarterly whenever your fund is reporting it. Last and very important is the pricing and valuation. For example, if you have bought some security today and after 3 months you are doing the reporting, means you are publishing your financials, then what do you need to do? You need to value your account, value your investments. For example, if you have invested into the shares of Infosys worth rupees 1 lakh today, and after 3 months the value of those shares will not be same, right? It will definitely change to some, it might increase or decrease, assuming that it has increased to like 120 1 lakh 20,000. So 20,000 is your gain. So that's what you need to record such transactions into the books. Hope I am making sense here. Any quick questions on this slide? You can unmute yourself or put it in the chat, or just say you're good if you're good.
I just wanted to know what is the investor activity subside more deep into this.
Yeah, investor activity is more of a like maintaining their accounts and sending them the statement. For example, just assume you are investing into a mutual fund, right? So you would get every monthly, you would get some kind of a statement, right? That your opening balance was this much, and you have made some activity, you have done some purchase and sales, and some profit and loss account the fund has generated. At the end, your investment value is this much, right? Every
So you're
investor would
totally
get that.
saying about like statements of account or the drawdown notices,
Yes,
that
yes,
kind of,
yes,
right?
exactly,
Okay,
exactly.
understood.
Yeah,
Yeah.
yeah. All about the investor related things where people from the like investment company reaches out them and take their concerns and assist them in the so having a like smooth flow of the transactions.
Correct.
Put
For onboarding process related.
and onboarding. Yes,
Understood.
yes,
Yeah.
obviously, yes. Somebody is asking portfolio activity. Portfolio activity is nothing but, for example, if there is a fund, mutual fund, again taking example, mutual fund, when you invest into mutual fund, that fund will invest into like some other companies, right? So each of the company is called as a portfolio. Okay, or the you can club all the companies and you can call that uh, bucket as a portfolio. Okay, so as a like portfolio activity as an accountant, what you need to do is like how much my fund is investing, right, in the various securities, various companies. So I need to keep a track of all those, how much I'm getting, how much I'm investing, how much income I'm getting, how much loss I'm getting from them, what is the valuation of those portfolio companies, everything I need to track. So that basically like summarizes my portfolio activity. Okay. Okay, moving on now. Now somebody is saying you are not audible. Is it the case?
No, you're audible only. It
Yeah, I
might
don't
be
know.
their connection.
Yeah, yeah. Thanks for that. I'm moving on now. So now we are coming to the topic, today's topic, that is private equity fund. Private equity fund, many people get confused here. Looking the word equity, we tend to think that this is general equity thing. No, this is not. This is not the generic your equity. This is something, private equity fund is something different. So what it is all about, right? So private equity fund normally invest into private non-publicly traded companies. When I say private, they do not they are not a fan of like investing into the public or going into the share market, right? Rather than they would invest into private companies which are not traded on the stock exchange. Okay. So that the reason being doing or keeping everything private is one of the like big reason people give is they don't want to like get exposure or give exposure to the general people, because when you might have seen, right, when you invest in the equity shares of Infosys again. So what do you see? You will see that all the documents are published for the people. You can go to the newspaper, you can go to their website, and you can see each and everything. Whereas in the private company, it is not the obligation from the authorities that you don't have to publish your financials to the public, right? That's a kind of secrecy they maintain, and that's the reason the private equity funds want to invest into private companies which are not traded on the stock exchanges.
So can we say private equity like it is a small firm or the startups only?
Maybe I would say not to ask these questions at this moment, because this all the coming slides would cover that. But yes, to answer your question, the answer is yes. Does that make sense? Okay. So private equity funds more closely resemble, as you rightly mentioned, it's a venture capitalist where they directly invest into the companies without like a kind of broker in between or something, right? They purchase the private companies and take the controlling interest. So they become the like kind of owners into the company. Okay. So mostly people like mix the private equity with the venture capital, but rather I would say being the venture capitalist is one of the strategy of a private equity fund. Rather, I would say private equity funds invest into venture capitalists. For example, if you take examples of this Ola, Uber, Zomato kind of, right? These were the companies which they started. They had some kind of idea when they came into the market. They did not have such big amount of money, huge sum, right? So what they did is they were looking for some big players into the market, and that's where they were able to get the large sum of investment from some big shots into the market, and they could like explore the idea went well, and they have now today have become like one big company into the market. Somebody is asking me about the examples. In the coming slides, I do have some funds which are like being traded into the market, being there into the market, both like US and the Indian private equity funds. I'll share that. Moving on, I do have the hedge funds also as a comparison. While we move ahead, we'll try to understand mostly about the private equity funds as well as hedge funds also. So what do you mean by a hedge fund? Hedge fund is nothing but it's a actively managed fund that pulls the money from the accredited investors, and the risk tolerance would be very high here. This is also do the same thing. Hedge fund also do the same thing like private equity, but here the whoever like investing into the people who are investing into the hedge funds, they are like more risk taking people. They are not bothered about their money if they are getting into losses, but if they are getting into the profits, nothing like that. So they are like hedge funds are like more risky in those terms. Hedge funds are not similar to again private equity. They are not so regulated. That's the reason they take a lot of risk when they invest into the market, and they invest into the short selling derivatives wherever they see they want to like get they see that they likely get the profit, then they go ahead and invest into any kind of securities, any kind of the companies, any kind of the currencies or the countries. So their ultimate aim is just to invest anything, anything and everything, or anywhere, I would say, right? So their ultimate intention is to get the profit to the fund. Okay. So a typical example is like they do short selling, they go for options, bond, commodities, currencies, arbitrage, and derivatives. Everywhere, basically, they go for it to get the profit. Is hedge fund is for high net worth individual? Yes, obviously, both hedge funds and private equity funds require huge sum of amount. Uh, at least in the US scenario, if you see, at least $1 lakh, right? $100,000 is required to invest into a, that's a minimum investment into a hedge fund or the private equity fund. You can imagine we are talking about $1 lakh, which is like not a small sum, and not the common man can invest. So mostly it would be like the other companies or the other financial institutions or high net worth individuals would invest into these kind of funds. Okay, so this is about the basics about some hedge funds. So how private equity fund looks like, what is the structure of a private equity fund? So it would be very simple structure, guys, not to like get confused here. It is very uh, kind of very small or the easy structure. So a company into the market, let us take example of the BlackRock, for example. So BlackRock is one of the top player into the private equity market. So what BlackRock is a financial, as a financial institution, what they do is they float the fund into the market. They start a fund into the market. Okay, assume that this is a fund. Okay, this is a fund, and they have, the name of the fund is Fund One. Okay, they have started this fund into the market now. So what they as a next step, what they do is they go for the people, they look out for the people, like they look out for the investors, right? So each investor would be called as the limited partner. You need to understand this terminology. So under private equity fund, each of the each of the investor is termed as limited partner, and the manager or the fund manager or the portfolio manager who is running the fund is termed as general partner. So manager is called general partner, and all the investors are called as a limited partner. And this is the fund they have started. What happens? These all people will give money to the fund, and in turn, this fund will invest into various securities, companies, portfolios, investments. I'm using the different terminologies, guys. If somebody is very keen about making their careers or want to really learn this, you need to write it down, these terminologies. Okay. So who can be the LPs? Who can be the investors into a private equity? As somebody was asking, right? Who can invest? Like only high net worth individuals can invest. So here are the some of the examples who all can be investors of a private equity fund or the hedge funds also. Pension funds, because pension fund has a lot of money, right? A lot of money in tech. They need to invest somewhere. They wanted to get they want to get some kind of returns, so they invest here. Insurance companies, you know about insurance companies, always goes into the profit most of the time, so they also invest into the private equity or the hedge funds. FOF, fund of funds, like fund of funds is nothing but one private equity fund is investing into another private equity fund. For example, somebody from Franklin Templeton, one of the fund of Franklin Templeton investing into the fund of the BlackRock. That is example of fund of fund. High net worth investors, somebody coming from has a good salary or the family business or something, they can also do. Family offices, you know, right? There are some big businesses run through families. They also invest here. Endowments, this also comes from the some like trust and foundations. So all those things, all these people can be a part of this fund as a investors. Any questions on this? I would like to take a pause here.
Sir, is it easily liquidatable or like?
They are not easily they are illiquid rather. Yeah, they are illiquid.
What is the ticket size of it, like to invest into this in
uh,
product?
yeah, as I mentioned just now, it's like mostly like in terms of dollars, if you're talking about, it would be $1 lakh. It's a minimum investment, very minimum.
And for the Indian investors?
Indian, I don't know exactly how much is the amount, but I could guess it. It would be around 10 lakh at least.
Okay.
That's what
Whereas the
I have the
LP is the
information.
investors, right? And GP are the who is managing the funds, like fund managers and
Exactly,
all, right?
exactly, exactly,
Okay.
exactly. Yeah.
Uh, I think minimum investment would be 1 crore for the hedge funds. I think.
Okay. In India?
No, no. For normal, this is the criteria for the hedge funds.
Okay. Yeah, one. Okay. So 10 million you're saying, right?
Yeah.
Yeah, it could be. Yeah.
There would be different classes in AIFs also, Cat 1, Cat 2, Cat 3. So different. Like startup, it is 25 lakhs. And for Cat 2 and Cat 3, it is 1 crore.
See, one thing I want to mention here. Earlier, we used to see some big amounts. Now we are seeing the funds, which are like reducing this minimum amount also. We have seen off late. We are seeing like
Correct.
some 5 lakhs or so dollars. I'm talking about. I don't know about Indian market. So we have seen some like they are investing as small as like some 5 lakh also, not 10 lakhs or something. They are reducing the amounts now. Okay, they are reducing the amounts. That can be different, depends on the like fund to fund.
I hope recently this 25 lakhs also has been increased to the 50 lakhs.
Mm-hmm.
So for the ticket size, as per the SEBI regulation, even this high net worth individual investor who want to participate in those areas, as he earlier mentioned, Cat 1, Cat 2, it is a 1 crore and the minimum ticket size would be the 25 lakhs. So if
Okay.
you go for the any Aditya Birla or IAFL,
Mm-hmm.
or you can go for the Motilal Oswal also running the private equity
Yeah,
funds. So
correct,
yeah,
correct.
so they will comes under the PMS, portfolio management
Okay,
services.
we'll discuss
Yeah,
when we
yeah,
come to
yeah,
that slide.
yeah.
Thanks for adding, Vikram.
Thank you.
I
Yeah.
appreciate that. Thanks. Moving on now to the like, what are the stages? Like, what would be the first thing private equity fund does, and how it goes? What are the like mid steps? I would say stages. Then how it gets ended. So I tried my level best to make it very simple for you guys. The private equity fund start with the identification of the investors. I would say first step as we discussed just now. The very first step in terms of the table we have here is the commitment period. When I say commitment period, so private equity, how it functions is they mostly like call for the take the commitments from the people. Okay, they don't take the money at the first step. For example, I am the BlackRock. I'm asking you guys some few people or the 50 people in this call, right? So you are the assume that you all are the LPs or the potential investors to me. So what I do is when I start my fund, I do not call all the money from the total investment from you. I'll just take the as a first step from the 10 people, for example, who agreed to invest into me. I would take commitment from you. So commitment is nothing but it's just a promise or the promise I'm taking from you that you would pay certain sum of money during the life of the fund. Okay, assuming the life of the fund is 10 years. So during the life of this 10 years, I would take a total of this much amount from person A, total of this much amount from person B. I'm just taking the commitment. So that becomes my first step. Okay. So you are just giving me commitment, and as and when required the money, I would do a call. So first step is the commitment. Second step is the call. For example, if somebody has given me the commitment of say for 10 lakhs. So as a first capital call, I would say all the people or all the investors would give me 10% of their commitment. So somebody who committed 10 lakhs to me, then they would definitely give me 1 lakh, right? Somebody given me commitment of 20 lakhs, then they would give me 2 lakhs as a part of first capital call. Hope I'm making sense here. You can just put it in the chat if you're understanding. That is about the commitment or the capital call. So commitment doesn't require money or doesn't involve money, I would say. And whenever people have committed already the total amount, then as and when required, I as a fund manager would make sure that I would call it from you guys. Okay, so that is called the capital calls. So multiple calls happen right? As a first capital call, I would ask for the 20 million, 10% of your commitment. And as a part of your next, say for after 6 months, I've got some more investments, like some more good lucrative investments into the market. So what I do, I'll just go for it, and I'll just see how much amount I require. I'll just also add to it some expenses of the funds, right? And I do all those calculation. I'll just come to some reach to some conclusion that I would require some 100 million right now. So what I do, I'll see how much I have to call from the investors. So I do a second capital call, asking that 100 million from the each of the from the total fund from all the LPs. That is called the calls. Then comes your investment period. Investment period is nothing but the investment manager or the GP focuses on making the investment into the market. Now he has taken the money. Mostly once he collected money from the all the investors, what he does is he just makes sure that he is investing into such companies which would give him a lot of profits, or the good profits, or the good returns. So as a GP or the portfolio manager, my job is to make sure that I'm getting a good returns at the end of the day, right? And that is my core job should be. Okay, so first initial years, if you can see here some initial 3 to 5 years or 3 to 7 years, I would say they mostly target the companies, portfolio companies, or the make the mostly investments. There are certain funds which would get the returns and also do the reinvestment of that returns, because they don't want to give it anything to the investors at the initial point of time. So they get it and they'll reinvest, and that the cycle happens for the initial couple of years. Then comes the very important stage, that is a harvesting period. Harvesting period is nothing but the where the fund manager or the GP starts selling the securities, starts selling the investments. So and as a GP, that's my job again to see what is the right time to sell my investments. So that is the decisions I had to make. As one thing to note down here is at the throughout the life cycle of the private equity fund or the hedge funds, mostly investors will not be a part of decision making. All the decisions would be taken by the GP itself. So he himself or the group of see, when I say GP, it doesn't mean there would be only one person. It can be a group of some experts also. Okay, so harvesting period, again, it would be like more of a selling of the investments from a particular private equity fund. Then extension can happen if at all. For example, I've decided that my fund would run for the 10 years. Then you have reached to the 10 years now. So because of the need, or in order to get good returns, what I do is I extend the fund for a couple of years. So that is also allowed under private equity. So I'll do any extensions if at all. Otherwise, I would reach it to the last stage, which is liquidating period or the exit stage, wherein I'll make sure that I'm selling all my investments from a private equity fund and give back returns to the all my LPs. Right? Make sense? Any questions? Just put it in the chat. I'll take it from there.
Sir, commitment period, you said we can make a capital call. How many capital call we can make in a life of one fund? Is there any specific number?
Yeah, there is no specific number is mentioned, but mostly what we have seen is usually less than 10 capital call happens, because mostly in a capital call they would ask for the 10%. So
Okay.
if they are doing a capital call of 10 capital calls of 10% each, right, that makes 100%. And mostly it would be 10% or more. So by that way, by that logic, you can understand it would be either maximum of 10 calls or the less than 10 calls.
Okay, understood, sir. And you're explaining like extending of period like 1 to 2 years. Okay. So
Yeah.
is it like green shoe, like same thing?
See, what all the private equity funds have they will decide when they start the fund, right? They would decide it that the life of the fund would be, say, 10 years in this case, in our example. So, and they also mention a clause that if required, under the discretion of the GP, this fund, this life also can get extended for a period of 1 year, 2 year, 3 years. So they have to mention this clause. They can't do it like directly when they are like running the fund. And today they have realized, oh, this is like 10 years is done, 10 years are done, and I don't have any clause where I have talked about it. So mostly all the private equity funds has this clause into the LPA. So LPA is nothing but the limited partnership agreement. This is same as your prospectus in the mutual fund on the private mutual fund or the normal equities. You see that, right? Prospectus which has all the fund details. So
Yeah,
prospectus
PPM,
or
private
PPM,
placement
you would
memorandum. Yeah.
call it as a LPA. Yeah, private placement
That's good.
memorandum, or you can call it as a LPA, limited partnership agreement. Management fees, somebody is asking. I'll cover in the coming slides for sure.
Sir, can an investor exit in the middle of the fund?
That I'll cover. That I'll
Okay.
cover. Yeah. Sorry about that. I'm just pushing your questions because, but I do have the slides on that. I don't want to like talk it now, and we can save some time now. But do ask so that I know the question would be covered in the coming slides. Okay. Okay. Let's move on. So there are some strategies. When I say strategies, it would be, to put it in the simple words, I would say this is for the private equity fund itself or the fund houses. When I say fund houses, is nothing but the financial companies which are starting or initiating the fund into the market. In our example, BlackRock is a company, financial institution, which is floating the funds into the market, right? So BlackRock is the fund house in our case. So these are the strategies for them mostly. What they do is like where to invest basically. So as somebody was like asking initially, like venture capitalist. So venture capitalist is nothing but the one of the option we have where mostly private equity funds invest. When I say venture capitalist, is nothing but they are the startups, right? They are the startups. They are coming with some ideas, but they don't have the money. And who all like watching, like you guys might be watching, right? The Shark Tank. Can you confirm in the group if how many people are watching? I just want you guys also
Yes,
to
sir.
do some work. Put it in the chat. I just want to see like how many of us like really watching that. If you really understand the private equity fund, right? This is a good platform, I would say, to watch it. Okay. So people are coming there with the ideas, and sharks, they call themselves as shark, right? So they are nothing but the like private equity players, I would call them as, right? Venture capitalist, I would say, where they are investing into a startup or angel investor. Facebook was one of the idea, right? Mark Zuckerberg, when he started, he was just a student, right? He didn't have some background where he has a lot of money. So some people invested into him, right? So one of the private equity fund or maybe some venture capitalist people like invested into him. Then the idea clicked, and they are like now doing like billions of business now, right? So those all categories, such kind of like companies would be a part of, can be called as venture capital, which is a part of private equity strategy. Okay. Then the growth is nothing but the normal one, where we usually talk when we talk about the private equities, right? Where you see you invest into some company and the company does well, and it will give you some kind of profit. For example, it can be also where you are investing into some real estate, and that is giving you some kind of returns into the future. So those all kind of strategies would be considered as the growth strategies, where mostly you would see the capital gains. So there are two things, guys, when we are talking about the growth, right? So there some people would be there as an investor. You can think of yourself also. Either you expect monthly or quarterly returns, very frequent returns you would expect, short-term returns I would call it as, and also there could be some kind of buyers or investors who would look for the long-term returns, right? They are not they don't want to like they may be earning good now, okay, as a salaried person. Many of us would do that. We don't want to like get frequent returns. Rather than we would keep our eyes on the long term return. For example, if I'm investing something today, I would expect after 10 years when maybe I'm thinking of the retirement or coming out of the company, then I would look for the long term returns.
Sami bhai, your voice is not audible. Hello? Sami bhai, your voice is not audible. Guys, please wait for some time. Maybe Sami bhai is rejoining the session. We will be there soon.
Sorry. Hello, can you hear me?
Yes, Sami bhai, you are audible now.
Oh, was I not audible?
Yes, you are not audible.
Okay. Was it so long? I don't know.
Yeah.
Okay.
Now it is
Can
audible.
you see my
Please
screen?
continue. No,
Can you
your
see my
screen is
screen?
not visible yet, Sami bhai.
Okay. Let me share it again. Oh, I didn't realize I was just talking here.
Okay,
Sorry about that.
no problem.
Just confirm me if you can see again.
Yes, now we can see your screen. Hello? Hello?
A moment, I just realized my internet is not working. Just a moment, okay?
Sure.
Hello?
Yes, Sami bhai.
Yeah, sorry about that.
Yeah, no problem.
I am sharing my screen. You can confirm and you can.
It is not visible yet.
Yeah. 1 minute. Is it now? It should be now.
Yeah, now it is visible.
Okay, thank you. Thank you, Wahid. Sorry about that.
No problem.
So maybe I was talking about buyout. So leverage buyout, I was talking about. Leverage buyout is nothing but it is the case where the private equity fund
Hello. Yeah. Sorry, sir. I mean, you're talking about the growth strategy.
Okay, I was still in growth.
Yeah.
Sorry. Yeah. So growth is like still kind of companies where private equity fund invest, where people look out for the long-term gains. They do not look out for the like short-term. Like example, they're kind of like two investors, right? Where one investor is focusing on having a regular income. For example, if I'm investing somewhere, by getting the monthly returns, I want to pay my children child fees, right? So I would be in such a case, I would be an investor which would be looking for short-term gains. I want regular returns on my investment. In the another case, if I am a salaried employee, I'm getting a good handsome salary nowadays. So I would not be interested in having some kind of regular returns, but rather I would be interested in getting a long-term returns. I would see what I would get after 10 years if I invest something now. So that all strategies, the second example in our case, would be a part of your growth structure. Okay. So buyout is very important concept under private equity. Many private equity funds does it. So there are a couple of like 3 examples I have taken. Can be some more. So buyout is nothing but the it is one of the example of buyout is leverage buyout. Leverage is nothing but the you can simply understand the word leverage by the loan. So in this case, private equity funds give a lot of loan or the lot of debentures kind of securities to the any other company which they want to target. So by that they want to like take charge of that company, not directly as a like owners of the fund or the board of directors, but indirectly they will give lot of loans to that company. They want to become the influencing party to there. So that is about the like LBO. And MBO on the other hand is like management buyout. So what happens in the MBO is the existing, so assume that one company is there where we have the board of directors. In such a case, in that company, if that board of directors, right, those board of directors, the group of board of directors or the experts who are taking the decisions, they would make some arrangement and buy that company. Rather than giving it to the outsider, they will buy the whole company, right? That is called the MBO. And one more, we have like management buy-in. Management buy-in, right? Management buy-in is nothing but on the other hand, as we understood in the MBO, this is would be bought by the some outside group of fund managers. In MBO, it is like taken by the like existing board of directors, and here MBI management buy-in, it would be done by the external like some companies, some A companies there which is not doing well or it is which is very small. On the other hand, we have B company which is running well and they have a lot of money. And those set of managers, right, who are running or taking the decisions there, they would rather interested in buying a company also. So their team basically, not the whole company, that their team of managers or the board of directors would buy the company A also. That is the MBI. You guys can read more. Not everything can be covered in a session of this 1 hour or 1.5 hour. So I would request everyone to read about these terminologies, write it down now, and read more about this on the Google or the internet. Distress is again a very widely used strategy wherein private equity funds invest in a company which is not performing well, who is on the verge of closing, who is about to liquidate. So what they do is they use their expertise now. They use their GP's mind there and buy that company completely. If that is a public company, they would turn that company into the private, and they will work on that, make that company up and running, and maybe ultimately they would sell it after some certain period of time. That is called the distress strategy, wherein they are investing into non-performing companies, and that would be available for like very less cost. So that's what they want to take the benefit out of it. Mezzanine is nothing but it is a hybrid of this, I would say, wherein they would invest both like equity shares or and also like what do you call, debentures. So mostly it is not directly equity or debentures, I would say. They would invest into something similar to the warrants, right, which can be convertible or the converted into equity in the future course of action. And they are like kind of very unsecured bonds, I would say. And when you say something is very unsecured, then usually they are high paying. So mezzanine strategy is something they would invest into a company which is like through like warrants kind of securities, which are like unsecured in nature, and they are highly paying. But and the one of the big advantages in the future, they can get converted into the equity. That's where you become the owner of the company directly. So the risk involved here is they are like unsecured. If a company goes into the losses, they would be the people like who would who have to face that. Okay, hope I'm making sense here. Put down in the chat if at all you guys have any questions. Okay, moving on. What is a like NAV cycle or the fund accounting cycle or the how and what are the things we have stages, I would say. So what would have is a NAV cycle. It starts with the cash. People or the investors get the cash into the business, right? They would give it to the GP, and GP will issue shares, not exactly shares, but their proportion of the capital, I would say. In case of hedge fund, mostly shares would be issued, but mostly in the case of private equity, it is their share of the capital. Then fund activity means the fund investment manager is taking the decision where to invest, how to invest, when to invest, all kind of decisions, when to sell, all taking decisions would be happen. And once you are ready with all the transactions, NAV would be calculated, right? Net asset value, NAV is calculated, and the subscription and redemptions happens like when you give money to the any fund, that is called as subscription or the contribution, or when you get your money back, that can be termed as redemption or the distribution. So this is just a slide I've put in to give you some idea. So this is again some of the terminologies or some of the features, I would say, of a private equity, and the same applicable for the hedge funds also. Very important is pool of money. They don't take from only couple of people or the one person. No, they invest. They take money from the lot of people, but they has to be accredited and high net worth investors, right? So pool of money happens first. They'll take from lot of people, make a basket of those funds and make the investment. And not everyone can invest here. Only high net worth individuals or accredited investor. Accredited means like highly qualified people. In case of some, they have invest some lakhs of rupees into the fund. If at all that the same amount is getting into the losses also, but they should be able to like take care of their finances, right? It should not be the case, right? Some person is investing some $1 lakh, and if the fund is getting into the losses, then he's gone. He's going bankrupt. He's not having money. It should not be the case. So that is the reason they check for the credibility of the LPs also, or the investors, like if they are from the good background or not also. Management fees, somebody was asking again. Management fees is the fees charged by the private equity fund or the hedge fund to their investors. So this is the fees they are charging for their services. This is the reason, this is the crux of the having or running this kind of funds. Because of like having management fees, having the performance fees, these funds are running into the market. So what is the fees? How much they are charged? 2% of the commitment. In our example, you must have seen, right? Somebody is investing like 1 lakh, right? So they would pay 2% of 1 lakh. If somebody investing into 20 lakhs, they will pay 2% of 20 lakhs, getting divided into quarters, yearly, quarterly, monthly, depending on the when the fund is reporting. Performance fees is very important, or the reason why they are likely like taking risk and introducing more funds is the getting the performance fees by the GPs or the fund managers. So it is usually, if you can see here, apart from this earning this 2% of management fees, you can imagine it looks very simple, right? 2% of the commitment, but assume that the total commitment is some 100 billion. So 2% on 100 billion, it would be huge sum of amount, right? So it is not a small amount, looks very small, but it is not small indeed. Performance fees, if you see, it's like 20%, up to 20%, or in case some cases it can be more fees they would get. And always remember, performance fees would be only applicable when fund is running into the profits. If fund is running into the losses or not performing well, there is no concept of performance fees in both the cases of private equity and hedge funds. There is another terminology called as hurdle rate or the preferred return. This is nothing but the minimum rate of return. See, whenever you invest somewhere, right, you would expect some minimum rate of return. For example, you have fixed deposit. Usually we call it as, right, 6 to 8% they will give. Similarly, if somebody is investing into private equity funds, they would again expect this apart from their normal investments, right? If somebody is investing into like 1 lakh, then he would expect first his 1 lakh, then he would expect some minimum percentage of profits, and then whatever remains. So this is the minimum rate of return investors expecting from the fund. So sometimes people interchangeably use this terminology, hurdle rate versus preferred return. Both of them are less regulated, means compared to like normal equity or compared to mutual funds, they are very less regulated by SEC into the US market and SEBI into the Indian market. They don't have like most of the regulations which are there for the mutual fund. That's why they enjoy being like secret or the behind the scenes. And closes also happen into the private equity mostly. First close, second close, third close happens. Close is nothing but the when the people join the fund, right? They do the closing. For example, at the first stage or the when I started the fund, only 10 people showed the interest, right? Those 10 people, I take those 10 LPs or the investors, I'll start running the fund, right? Then what I do is I'll do the first closing. That particular point of time, I would call it as a first close or the initial close. Then the subsequent close happens after 6 months, some 3 months or 6 months. Some new people also are attracted. They also want to invest into me. Some 5 people also now coming. So what I do, I'll take commitment from them after 5 months or so. Then I will do the second closing. So as and when I close the commitment, I finalize the commitments. Each of that step, I call it as close. So initial close or the first close, and the second close, third close, then the final closing would happen. Any questions on this slide? Very quickly.
Yes, sir. I have a question regarding the management fee. My question was, you're saying that 2% will be charged on commitment fee, right?
Yeah.
Actually, in hedge funds or in mutual fund, no, we'll straight away give the money to the manager, right, in the initial days itself. But in private equity, actually, we are committing a fee, committing an amount, and we are partially passing on the money to the investor manager, right? So the management fee will be given to the total commitment, or the capital the manager has called.
Mostly it would be on the commitment, but yeah, there are multiple ways to calculate management fees again. So one of the famous method which I've talked about, that is a commitment. Otherwise, it could be like invested capital, as I mentioned here. So like how much you have invested out of 1 lakh, for example, you have invested 50,000. So there are certain investment managers who would fix the fees as the invested capital, and there can be some other examples or the other formulas which would calculate on your NAV, your ending balance also, right? there can be multiple formulas we can have. Yeah, as you rightly mentioned, hedge funds and mutual fund, that would be a part of the directly expenses as they are paying the other expenses.
Okay, sir. Thanks.
Yeah, thank you. Any other
So
under the
my
chat?
question is for last point, initial and the subsequent close. For
Yeah.
initial, you said like after 10 investor, we can close first. Okay. Then after that, for subsequent invest, like investor will
Your voice is
second
breaking.
closing. So what is the
Your voice is breaking. I don't know who is talking. Can you just put it in the chat? I hope it is same with everyone, right? His voice.
Yes, sir.
Yeah.
Is it
You
audible
can
now,
put it
sir?
in the. Yeah, it's better now. You can try.
Yeah, I was just asking for initial investors who all invest. So what's the benefit for them?
Yeah, yeah. I think you're. I got your question. So
Equalization and rebalancing.
yeah. Equalization. There is concept called as equalization would be there, wherein the new LPs would be paying some kind of premium or some kind of equalization interest to the old LPs. In our example, 10 people came into the first close, 5 people came into the second close, right? So second close LPs would get their commitment amount or the call amount. Apart from that, they also have to pay some kind of interest that is called as equalization interest to the old LPs because they have come into the fund initially, so they should get some benefit being into the fund and paying the expenses of the fund. So definitely they would be liable to pay equalization interest. Yeah.
Understood now. That's what I wanted to know.
Yeah.
Thank you.
Thanks, man. Moving on. Okay, I've got some differences regarding the private equity and hedge funds. I think most of the points we have covered, but yeah, quickly we'll try to touch base upon. So time horizon, if we see how they are different from each other, mostly hedge funds are like short term in nature because their intention is to get the profits without like time bound. They want to get the profit as soon as possible. So they are investing anywhere, right? So they would look for short term gains wherever they find it lucrative. They will invest and sell it if required and get the gain. Whereas in PE part, private equity, they would always look out for long-term benefit. That is the reason you have seen some stages they are following. Like first stage, they are just taking commitments from the people. Second stage, they are focusing on making only investment. They are not selling, right? In the third stage, they are just doing the selling. They are not taking money from the LPs maybe, right? So in that way, private equity funds are long term in nature, and when they get the profit, they get in abundance. That's what we have seen while we do the accounting for this kind private equity funds. And the fund type, if you're talking about hedge funds are open ended and the private equity fund are the close ended funds. So those who don't know what does it mean, so open ended funds are like a kind of any equity fund which is available in the stock exchange, right? You can go any point of time if you have money and you can buy any security, right? And at any point of time you want to sell it after 2 days, 3 days, 4 days, 5 days, you are open to sell it. So all such funds which do not have any lock-in period, they are called as open-ended funds. And on the other hand, you have close-ended funds. Private equity funds are one such example, wherein you can't take out your money, and there would be something called as lock-in period. So 3 years is the like minimum lock-in period would be there. Like within 3 years, they can't take out their money. So whoever like investing into private equity, they need to check the LPA first and make the decision whether they can wait for the such period of time of 3 years, 5 years maybe. Where do they make the investment now? As we have already talked about hedge funds, they virtually basically they want to invest in anything and everything. That includes all these examples which we have discussed: bond, securities, derivatives, arbitration, right? Arbitration is nothing but the you are taking the advantage of the currencies. You buy some US dollar from one market and sell it in the another market where demand is more. So that's how you take the advantage. So hedge funds basically do all the stuff and just make the investment in such securities. Whereas private equity, they are very strict in that, in making investment. They make all their efforts to invest mostly into the private companies only. If at all they invest into the public companies or the some public companies initially, some small companies of public company, then they would, what they do is in the long run they would convert into the private company. So mostly their focus is into investing into private companies. About the capital, when it is called in case of hedge funds, as they are kind of uh, open-ended funds. So you would, for example, somebody has got 2 lakhs with him, they can invest directly giving by 2 lakhs, right? Mostly that's kind of one-time investment. If at all you get some more money, then you will check with your fund manager. If the fund is open, you can still go ahead and invest. And what about the private equity? You have to do it. You have to give money as an investor when the GP is calling, right? That's what we call it as a call 1, call 2, call 3. These are called capital calls or the drawdowns. They are called capital calls or drawdowns. So commitment is nothing but just a promise. Capital call is the time when the investor has to pay money to the investor. Transferability, or the when they can transfer, can they transfer, all those things would come under here. Hedge funds, they can go to the simply go to the market and sell it. Mutual fund also mostly they can go to the market and make sell it, or the, in case of like normal mutual fund, you can do the redemption. There is no restrictions on you. Simply you can do the redemption if your fund is open-ended fund. In case of private equity fund, there is no such option is available. They have restrictions. They can't directly transfer to anyone at any point of time. There would be some restrictions on that, but there would be option to transfer, but at a later stage of the fund, not initially. That makes them very illiquid, right? When we say they can't transfer, it means they can't sell it to the open market. So that's how they become illiquid in nature, whereas hedge funds liquid in nature. So what is liquid, illiquid? It is nothing but the how easily you can convert your investment into money, right? So in this case, hedge funds, you can go to open market and sell it off and get convert into cash, but that is not in case of private equity. Risk, like which are more riskier? Both are riskier in nature because both involve huge sum of money and both are investing into some private or unsecured kind of companies. But still, private equities are considered as less riskier because they are not investing anywhere and everywhere. Similar to like not similar to mutual hedge funds. Sorry. So hedge funds, they focuses on achieving like maximum returns, right? That's the reason they are investing anywhere. That can cost to them sometimes, and that's what makes them more riskier than the private equity funds. Life of the fund, open-ended funds usually don't have the life as such. They keep running unless portfolio manager thinks after a certain point of time that we should close and open a new fund. Otherwise, that fund continues for a long period of time. Whereas in private equity, usually the life is 10 to 12 years, that is written on your LPA again, but that can be extended depending on the requirement. Extended can for a period of some 1 year, 2 year, 3 years. 1 year extensions would be there. Control over the assets, there is no such control in the hedge funds, I would say. It is not there directly in the private equity also, but comparatively, you will see what's happening with your funds. In case of private equity, you can ask for the details and all, which is very unlikely in case of hedge funds. Yeah, we have to rush. It's already 4:10. Okay, so these are the like very important topic we have reached now. That is called as waterfall distribution. I would allow you guys to read it for a minute, then I'll explain you. Can someone read it loudly? One person. You don't have anyone who wants to read?
Yes, sir, I will go.
Yeah.
Distribution waterfall in private equity. In private equity investing, distribution waterfall is a method by which the capital gained by the fund is allocated between the limited partners and the general partner. Type 1, a European style distribution schedule is applied at the aggregate fund level. With this schedule, all distributions will go to investors and the managers will not participate in any profits until the investors' capital and preferred return have been fully satisfied. Type 2, an American style distribution schedule is applied on deal by deal basis and not at the fund level. The American schedule spreads the total risk over all the deals and is more beneficial to the general partners of the fund. This structure allows for managers to get paid prior to investors receiving their preferred return and 100% of invested capital.
Right. Thanks, Nitin.
Thank you, sir.
So a distribution waterfall is nothing but it is a like method how the profit would be allocated between the LPs and GPs. That question might be coming to our mind, right, when we are talking about the private equity, like how they are, like how much percentage would go to GP and how much would go to the LP at a later stage, right? So European model, which is very famous, widely used, is the European model. So these are two models mostly applicable for calculation of the distribution waterfall. So European model, to understand this, is very, very simple, I would say. For example, if some I'll take some that very simple example of 1 lakh. So a person A is investing 1 lakh, and in case of European model, what would be the like steps under the waterfall is, first step, it would be he should get his return, his principal amount back, that is 1 lakh. Then there was a preferred return, right? We discussed about like 8%, assuming 8%. So he should get, as a second step, he should get some 8% return on the 1 lakh. How much it would be? 8% on 1 lakh?
8,000.
8,000, right? 8,000. So he would get, as a first step under the European model, 1 lakh. Second step, he would get 8,000. Then he is eligible to get some kind of other returns also, which fund has earned. So this is simply about the European model, and this is the third step only. This GP becomes eligible to get the performance fees. Okay, that is called as carry. I do not have on this sheet, but that is called as carry in case of private equity funds. In case of hedge funds, you call it as a performance fees. In case of private equity fund, you call it as a carry or the carried interest. Okay, so in case of European model, GP would become eligible only after paying principal amount to all the LPs, then paying the preferred return of 8% or 6%. Then only he will become eligible to get the returns or the performance fees. Whereas on the American model, they do on a deal by deal basis. So deal by deal basis, nothing but the deal by deal. Deal means nothing but the investments. Okay, my fund is investing into some 10 securities, right? So what I do is, if I'm getting some returns from one of the security number 1, right? So what I do is, I'll do the calculation on the security 1 itself. How I have performed, I will do the calculation, and I'll do the performance fees calculation there and then itself, and give it to the GP, right? I will not bother about whether my principal amount is paid to the investors or not. I'm really not bothered about that. I'll just do the calculation of waterfall based on the deal by deal basis. So one deal number 1 is sold, for example, then I'll start doing calculation. I'll enjoy the carry. Whereas in case of European, there was some layers. First, I need to make sure that I am paying 100% capital to the LPs. Second stage, I am paying like a preferred return. Then only I become eligible. So what do you think? Which is like favorable to the GP out of these two?
European style.
First or second? More favorable to the GP.
First.
Second.
For GP, it is second one, and for LPs, it is first one.
Okay, why is it so? Second one?
Yeah, as they get incentive fees, I mean, prior to the distribution of capital.
Okay. Anybody else? Anybody who's saying first, what is your logic? Can you tell?
It's based on deal by deal. Every
Like
deal,
preferable to LP as the like they are getting first preference over GPs after like getting the like prefer return and the first commitment only GPs are eligible for whatever left, right?
They're
Mhm.
getting their
Second
investment
American
back,
style,
and
it
they're
is
also
like
getting minimum
preferable to
return.
GP as the deal by
One by one. Maybe I can see Hafiz. Hafiz, you want to try?
yeah, yes. In American style, it's deal by deal. So in European style, it's like whenever they get profit, they have to first give it to the investors.
Okay. So which is more
So
favorable to the GPs? Like which one they want to
second
follow
one,
out of
second
these
one
two?
is the second one is favorable to GPs.
Okay.
second one is
Reason?
preferable to GP.
Hold on,
Because,
Let
because
him
in
complete.
European style, first they have to give preference to investors, and
Okay.
after paying investors, if any amount is left, then it will come to the GPs. Whereas in
Okay.
American style, it's not like that. So it's
The
like deal by deal,
from
he'll get his
initial,
interest.
yeah, from initial step
Initial
itself,
step
they
is
have started receiving the
exactly.
kind of
Yeah,
carried interest or
there
the
are no
performance
layers in
fees,
that
right? No
American
layers.
style.
Yeah, rightly
Yes.
said. Rightly said. Yeah, that's the reason, guys. That's the reason. They GPs want to follow American style. That's the reason you will see mostly fund would be having European style model of waterfall distribution. Okay. If at all you have any question, just put it in the chat. I'll try to take that. Yeah, here is some example of the same return of. This is what I was trying to talk. So it's like return of capital. That's your principal amount, preferred return. There's a minimum return. Catch up phase 2080. So you would pay this 80% to the GP. This is contrast to my previous video where I might have said the other way around. So mostly what I've seen is 80% is paid to the GP and 20% would come to the LPs at this stage because he is getting this is the first step for him because they have already received their minimum returns and all. They are receiving 80% and don't think that we are giving like 80%. How can we give 80% to the GP? So when we calculate this 80%, right, there would be a lot of restrictions also would be there. There would be some limit would be there, not on the total profit. It is directly 80%. So you can learn more on this topic. This is very interesting and very important topic. And next stage come once this stage is over, split phase. Some people call it as or carry phase also it is called as wherein GP would get 20% and the rest all 80% would be given back to the LPs. I would expect people here, those are really interested. So go and search on the Google. There are a lot of explanations are available. Okay, so what all we need to do as a part of private equity fund accountant, I would say, right? So cash reconciliation, I'm just going like randomly as per the order. Maybe I'll try my level best. So first you need to do like a cash reconciliation. You need to make sure that how much cash is coming into the fund, going out of the fund. You need to do all the recordings. Okay, all the accounting entries, you need to make sure you are booking it. It would also include some income accruals or the expense accrual for which you have not paid or you have not received the amount, right? Such thing also you need to make sure that you are taking care of. And preparation of financials, or I would call it as the preparation of or calculation of the NAV happens first. Okay, then after the NAV calculation is done, then you will prepare the financial statements also. So when I say financial statements, it would include balance sheet, income statement, your cash flows, partners capital statement, and also some notes to financials. This all would make me all would make financial statements. An issue of partner capital statement. See, end of the once you have done with all the calculation, all the entries, you have calculated the NAV, everything happened or everything is done. What you do is you will issue the partner's capital statement. It is nothing but the how you get the statements, right? When you invest into mutual fund, same thing. You as an accountant, you need to prepare, and you will. That's how you get the exposure of how the investor statement is built upon. Monthly and quarterly reporting, there are certain NAVs which would be monthly also into the private equity and hedge funds also. And there can mostly in the private equity, it would be quarterly NAVs would be there. So all the quarters data you need to reconcile, book all the entries, and then do the valuation, check the valuation of your investments. That you prepare the do the calculation of the NAV and finalize the books quarterly. There can be some audit request would be there at the end of the year when your private equity or hedge funds are getting audited, right? And this is mandatory thing. And as a private equity accountant, that is, you should be aware what they are auditors are asking. They can pick some randomly entries, or they would ask for some expense invoices. You have booked some like audit fees. Then they would ask for like on what basis you have calculated and booked that audit fees. So you should be, as an accountant, you should be aware what to give them back when they have some kind of request or the queries. Tax preparation, we do have the taxation on the private equity, depends on the region it works. Okay, it may be like depending on the country to country, it differs, but taxation calculation would be there. And always remember, taxation would not be there on the private equity fund as such, but it would be there on the individual income. So all the LPs will be having the income, income tax charged on their income. Suppose it's been like 2 years for a fund, and fund has not distributed anything to the LPs, then such a fund will not pay anything. Those LPs will not be liable to pay any tax because they have not received any returns from the fund. So these are the, as I told somebody in the beginning, these are the some private equity companies into the market. These are like US based, I would say, and very famous into the market. Blackstone, KKR, CVC, Carlyle, and these are the yeah, these are the top players. Okay, these are the top players into the private equity. And the next slides, what I'm getting is, yeah, these are the companies which have like investing into, or they have offices in India, right? They may be investing or the having offices in India where they are doing accounting. So these are the like foreign players, international players, but they have operations in India, or they may be investing into Indian markets or Indian real estate sector. And this is very important for us as we reside here, about like what all companies, private equity funds, the Indian companies have started. So this is, I could find it on Google. These are some of the private equity funds which have already started and up and running. Okay. Kotak, Cyrus, Motilal. So this comes to the end of the session. If at all you guys have any questions, you can ask me. How will calculate carry? So for calculating carry, there would be some Excel based formulas would be there depending on the LPA. Not always remember, not all the funds will have the same exact formula, right? There can be difference in terms of how this formula is written in the LPA. So you need to be aware of that. But the underlying logic of giving, like in case your European model, if you're following, underlying logic would be same, like ROC would be given, preferred return calculation would be given, and then the next level it will go to calculating 80 to 20%. Any other questions you guys want to ask? You are free to ask now.
Yeah, Sami bhai, Hafiz here.
Yeah.
The explanation was very beautiful and I liked it very much.
Thanks.
My question is like, I have a total 10 years of experience,
Okay.
but I am into finance and accounts payable thing.
Okay.
So like we do not deal with the profit and loss accounts and the core accounting and journal entries kind of thing.
Okay.
So if I want to shift from accounts payable to fund accounting, so do I have to gain knowledge in all these things like core accounting knowledge?
Yeah, that's a very important and a good question, I would say. So this is for all the people. Can you go on mute? Whoever has mic open. Vikram Kumar, can you please? Okay, thank you. So this is very good question you have raised. So this is for all the people I want to answer this question. First thing is for the people who are working in some non-accounting or not core accounting department. Okay, that includes one of your like accounts payable, reconciliation. People are working like n number of departments are there which are like considered as non-core accounting, right? So for such people, if you ask me if there is any scope into the fund accounting, I would say yes, it is there. But the requirement is criteria would be little stringent for you, little like strict for you. The criteria would be this is applicable for all actually. The criteria is you should be good at accounting first thing, very good at accounting. When I say accounting, you should be knowing the terminologies and you should be knowing the journal entries. You should be aware of financial statements. Okay, these are the basic things. Second thing, which is like required but not 100% demanded by the employers, that is knowing the private equity or the hedge funds wherever you are trying to apply, right? So that is optional but very important again. The more you know about the private equity or the hedge fund, that would be add value to your candidature. So best thing, if you're really interested into the coming into this world of fund accounting, then definitely you have to go through this. So mostly see, I also do take interviews, right? So our expectation would be mostly on the accounting side. Accounting has to be very strong. When I say accounting, I'm not asking you any other accounting, something different accounting. I'm not asking anything. What we as an employer or the as a hiring manager, what we expect is the general accounting.
ऊपर का है फर्स्ट फ्लोर पर रहता हो रहा है फर्स्ट फ्लोर
Can you go on mute, whoever is talking? So this is very important, guys. You should be very, very good at accounting side. Okay, you have to be a master of that as much as possible. I'm not saying you should be 100% like answering all the questions. No, whatever the basics it takes. A couple of more things. It would be like you should be read about basic concepts and conventions, right? Just be thorough on that accrual concept. Make sure that you know understand it well. Okay, and about the journal entries, you need to spend some good time on it. And the more you know, apart from this, the more you know, the better it is. And who can apply these
सीट
days?
के अंदर डालते हैं
Uh, somebody is still talking. Can you just go on mute, please, if you are not asking? Okay. So nowadays for the freshers, right? People do ask me freshers. So freshers entry is there, but mostly companies are preferring freshers with CMA and CA background. So you need to keep in mind that very, very rare cases wherein the companies are hiring like BCom or MBA graduate as freshers. I'm talking about mostly they are not, but there could be sometimes where you need to grab the opportunity. So otherwise, those people in this call who are like from CA background or CMA background, even if you have done like inter level also, CA inter or CMA inter or CFA for that matter, CFA, CMA, like CPA, all those accounting degrees, professional degrees would be helpful now as companies have started taking such people with such backgrounds. And again, for them also, having the CA degree, if you are qualified also, if you don't know the accounting, then it is very unlikely that you would get the opportunity. Okay. Hope I answer your question.
Sir, what is the minimum experience required for non-CA background people?
Minimum experience, there is no such minimum experience. All it takes is your knowledge and skill set. Because we have seen off late, I would say if you have worked somewhere for 3 to 4 or 3 to 5 years, right, that should be enough. But again, having said that, the question, the points remain same, criteria remain same, and that you should be a master. Because we have seen, I've seen people from different background also they are joining, but at the same time they were equally good in terms of accounting.
Okay.
Any other? And as I mentioned on the flyer, right, couple of things I just quickly want to cover here. As I mentioned there, salaries are really attractive, guys. See, at the end of the day, we all want to work for the getting some kind of good salary, right? So that we become stable and we see the growth. So salaries are really good in the fund accounting. If you have the right skills and core accounting job, you would be working day in and day out discussing about the accounting. You would be happy about that you are learning each day. Believe me, each day is a learning for us. Each day, I'm saying it's been like more than 12 years, right? But still, when I open or sit on the system, we'll discuss a lot of things on a daily basis. So every day is a learning here. You will not feel bore about that, and you will not think that this is some kind of copy paste job. It requires a lot of attention at the same time. A lot of things you need to remember, but you can enjoy your job. Growth is there because there is a lot of demand. Many companies are coming to Hyderabad, Bangalore. Where not? Through across India, companies are coming like anything. Many financial institutions are floating, starting their funds, private equity funds. As you have seen, right? At least I have mentioned 10 companies, private equity, which are like Indian based. Obviously, they would require fund accountants to do the accounting. They don't take the normal accountants, right? So you can see how the growth is there. So when something is demand, then if you're doing well on a day-to-day basis, then definitely you will see the growth also. How you like flying from one position to another positions very easily when compared to like other processes. Traveling abroad, there are many companies right now. We usually see a trend earlier, like mostly IT people used to go abroad, like US, Canada, Australia, UK, and all. But we are seeing that many companies are there into the fund accounting industry, which are sending people for the short term, long term to these countries. Okay, so there is a lot of opportunity for the people to travel abroad also, if somebody is really interested. And continuous learning environment, as I mentioned, there would be a lot of learning. You will enhance yourself each day. You will add value to the process, to yourself, and at the end of the day you will feel satisfied with your job. Any other questions? Any
Sir,
last questions? Yeah.
yes. Is a MBA plus point to get into fund accounting?
MBA become would be almost similar. If you have BCom degree, that would be enough. But having MBA, yeah, it can have little more advantage. But yeah, not to the great extent. But yeah, it would be there. What matters is your skill set.
Okay.
Okay. But there can
And
be some companies which would say like post graduation into core finance. They will see that way, right? So such companies can give a like plus point.
okay, sir. Like for a person with not with a BCom degree, like if a person has a BBA in finance,
Okay.
so yeah.
Yeah, it does. Again, skill set.
Okay.
If you have the skill set which we have talked about, yes, why not?
Okay.
Hi sir, yes, Shiva here. Can you eligible candidate like BCom plus MCom candidate, sir?
Yeah, why not? You are totally accountant, right? BCom, MCom is a big combination. Yes, you can, Shiva.
Okay. So how much package will expect, sir, for long term in fund accounting? Like
How much you are expecting?
I'm expecting like 15, 20
Huh?
near to 15, 20, sir.
15, 20. After like how many years of experience?
Near to 10, 5 to 10 around.
That is something something little more, but there is a possibility. There is a
Like for example,
possibility.
8 years of
It
experience
depends.
candidate.
You see, when you are expecting 15 lakhs, you also have to make sure that you are worth 15 lakhs. If you are really worth, then companies don't have any problem giving it to you. There is a possibility. Just to answer your question, there is a possibility.
Great, thank you.
Yeah. Anybody?
Sir,
Yusuf, you want to ask?
yeah, last question, sir.
Yeah.
Which accounting software you guys use as a fund account?
There are different accounting softwares for private equity funds. I'm aware of, not about the hedge funds. Private equity, we do have Investron, which is very famous, and we use mostly eFront application is there. We do have Geneva application. We have Capital Tracker. We have Yardi. Yardi, I think I have
Yeah,
not
for real
used.
estate mainly.
Yeah, mostly real estate
Yeah.
funds, as Nitin mentioned. Yeah. So we do have these softwares, which would be licensed one, mostly not available into the market. But yeah, it would be easy. This software would be again easy. But if you know the like basics, if your basics are strong, then you can work on any software. So the point is coming to again to the same thing, which is like having the good skill set.
Okay, yes, sir.
Okay, so these are the numbers I have written on my slide. If you guys can see that, if somebody is not already added to the group of our CGC group, as you might be aware, this was done through an NGO called Career Guidance Council. And every weekend we do sessions. So mostly Saturday webinars happen, and Sunday we have offline classes on different topics. Those who are in Hyderabad, they can attend like offline online sessions. Okay. And numbers are given. If you are not a part of our job groups, you can send your details on the given numbers and get added to our groups. So what do you get once you get added to these groups are, you will be aware of like what's happening, like what webinar is happening, and what kind of offline sessions we have on Sundays. And second, very important is we also share job opportunities. Okay, genuine, I would say. We try our level best to make it genuine. We'll do some verifications before sharing it. So all like authentic job postings we share there. So get added and keep attending our sessions. Okay, thank you everyone. And
Sir,
once
can you share
this,
the WhatsApp link in this chat, please?
can the admins share it, please, if possible? But you guys can take this number before we finish it. CMA
Okay.
USA, somebody mentioned CMA also. USA, they hire. Yes, they do hire. CMA USA, CMA will have more advantage than CMA India. Somebody is asking, okay, Shiva asked long-term career in fund accounting. I would say, yeah, it is the one which has long-term career. It is the one,
Hello.
definitely. Yeah.
Hello, sir. Sir, I
Yeah.
have a doubt about that one thing. Sir, I'm pursuing the MBA finance, sir.
Okay.
Yeah. In what field what course we have to do with, we have to pursue the same job as related to MBA finance?
There are again different things, Abdurrahman. So fund accounting is one such option for MBA or the finance grads, right? There can be SAP, there can be Oracle, financials people do. There can be some people who would look for the auditing kind of jobs. So whenever we want to do some kind of job, right? What we look for? We look for some kind of salary packages. We'll see for the growth. then it depends on you, which one you want to go for, right? It depends on your goals, where you want to reach yourself, where you want to see yourself. Depending on that, you can take the decision.
Okay, sir. Thank you.
Right. Any last question? I'm winding
Sir,
up.
I have one question.
Yeah.
Sir, I work in accounts payable and I see there's a lot of automation happening. So is it the
Okay.
same fund accounting as well?
Very good question. Automation, effect of automation on fund accounting.
Yes.
Based on my experience, I'm saying whatever the automation comes, there would be manual intervention would be there in the fund accounting. There would be, and it would be there. It would be there. A lot of things would change, but the kind of requirement we are seeing when it does says a lot that many people are still required and will be required in the future also. So don't get scared. For at least next 10 years, I can say you there won't be any much impact of automation on the fund accounting side.
Even in the low end jobs as well.
Which one?
I mean, starting entry level jobs as well.
You're talking about fund accounting?
Yes, yes, in the fund.
Yes, it would be applicable to all the fund accountants. Yeah,
Yeah,
it won't be. Yeah. So hope you guys have noted down already. And
hello.
Yeah, your voice is breaking, man.
Yes, sir. Last question. Like, what about the? Is it audible?
Yeah, go ahead.
Yeah, sir. What all are the like journal entries regularly we used in fund accounting, sir?
It would include everything. General entries related to what do you call investment side, or accruals, I would say. Accruals, all the expense accrual, income accruals, all those entries. And the cash entries, what would be the impact? Prepaid, right? Prepaid expenses, prepaid incomes, outstanding expenses, outstanding incomes, all such things. And investment, like when you make the investment, when you get the realized, when you get the unrealized, how do you account all such things would be a part of it.
Hello.
Yeah.
Hello, sir. If you have to pursue in the fund accounting, the career, what it is either related to fund accounting?
There is no such course of the Raman. It is just basics knowledge which I have talked about. General entries, knowing the fund. Yeah, that would be more than enough. But you have to make sure that you are really good at the accounting.
Okay.